Okay, Monday, the 21st of August, 2023. It's another weekly look ahead. Thanks for tuning in. Please do click to like and subscribe. If you're watching this on YouTube, it would mean a lot to have you following along. So we're gonna, as per usual, go through what we're looking at the calendar here this week, and then a couple of stories that I found interesting, and then we'll kind of round it off. We'll kind of generally look at equities and the selling that we had there last week, and oil as well. So, yeah. So quickly to scan through this week, the big event. Now, the big event is going to be Jerome Powell talking at Jackson Hole on Friday. All the central bankers are there. They're all there. Christine, Bailey, they're all there. So, really pretty quiet week until we get to there. Starting off today with the PBOC loan rate coming in with a cut there, not as much as was forecast by a lot of the banks, and we'll talk about that in a second. And there is kind of an interesting story there. German PPIs obviously coming out weak. The year on year actually came out negative. What was it? -6 year on year. Deepening from expectations of, I think, -5.5 was the expectation. So it's, look, Germany's in a bit of a bad way, recession, but I think it's not really as bad as the press would make it out to be. Anyway, back to the calendar, looking through the rest of the week here. Tuesday, existing home sales out of the US. I'm going to look at that as well, the existing home sales in the home market in the US. Then you're going to get Bowman speaking 7:30. I will not be at my desk at that time. Going into Wednesday, existing home sales. We'll also get oil APIs. And last week was a draw of 6 mil there, 6.19. And then we came in with a bit of a confirmation on that the following day on DOE. It was a draw of about 5 mil. So keeping oil elevated, but there's a lot more than DOE keeping oil prices elevated. It's a much bigger market than just what the US has in storage tanks, right? But we do see market moves on it. Okay, then coming into Wednesday, again, no real fireworks here. German services PMIs, manufacturing PMIs. You're looking for these figures to probably go even further down, but we're not really going to be trading that as a particular data instance. Going through then UK composites, manufacturing and services PMIs, along with the European data sets, and then coming into the US building permits, services PMIs, manufacturing PMIs, new home sales, and then crude oil. This week, looking for a draw of 2.29. I think it's going to be a lot bigger than that. And then Thursday, Jackson Hole kicks off. So you're going to get some central bankers speaking. You're going to get, some of the bankers speaking as well. So you could probably see some better market moves when we come into our desks to trade this on Thursday around the US session. So there could be some interesting stuff going on when we kick off at Jackson Hole. And then obviously Friday, German GDP. It's not looking good. And then Jerome making a speech at 1 o'clock GMT there, and then followed by Michigan consumer sentiment, so on and so forth, and US rig count. US rig count is kind of interesting these days because you're really seeing nat gas rigs dropping off quite a bit, but you're not seeing a return to pre-COVID drilling levels as fast as you would hope. And it's just not as bullish a picture. However, Reed just sent me a message this morning that I'm catching up with here, noting that the Chinese Petroleum Engineering and Construction Consortium have now done a contract with the Abu Dhabi National Oil Company, ADNOC, to enhance the production on their old fields, Bab and Buhasa fields. And so that really speaks to the bullish picture that we have for oil, generally Brent and WTI going forward, not only through to the end of this year, but obviously into next year. And why is it speaking to that? Well, you're not going to invest in what's called re-stimulating old um, wells, essentially, if you think the oil price is going to tank or if you think we're into some murky waters ahead for the oil price, right? So, getting into some of the news stories, just when we're looking at those home sales figures, you're really seeing this sort of seasonality effect coming through here from February and then dropping off on the home sales. And if we kind of look at a 5 year picture, you're kind of seeing, well, we started raising rates pretty much around here, all right, and the existing home sales has just completely dropped off a cliff with the Fed policy of rising 575 basis points since then, and a little bit of relief into the start of this year, that seasonality kicking in, but then tapering off again. So we just thought, wouldn't it be interesting if we could kind of look at home sales minus building permits, to really normalize what's going on in the US housing market. And you can see this goes back to about 2020, obviously, coming out of an absolutely annihilated data set, but then we rallied up into the end of the year there, with just so many people, so many sales going ahead, and so much building activity then kind of opening up and getting back to a bit of work, and people getting back to the office and improving loans and whatnot. But generally then that has completely subsided, and have we double tap bounced here back in January this year? Again, bit of that seasonality effect coming through on this. But I think generally this building activity can bounce to the upside, and I think can remain strong. Now, a lot of people are saying, well, hold on a second, rates are super high. Why would people essentially start building new homes, or be mad to, be really bullish to just get into new homes? And I think a lot of people are afraid of these rates going higher, and so that's why a lot of this kind of, you're seeing a couple of bids coming into this graph here. If we kind of go back to that 1 year graph, you're seeing existing home sales haven't really tapered off that much, to be honest. But I just thought it was interesting to kind of compress these two, the building permits, or sorry, the existing home sales minus the building permits, just to kind of normalize the full activity of housing here. So, all right, moving on to something that we were looking at, and certainly Reed was talking to us about this morning in our Discord, is European gas prices growing on the prospect of an LNG strike in Australia. So you kind of sitting there going, hold on a second, Tim. Do Europeans buy Australian LNG? Answer is no, we do not. But the market is jumpy on this, all right? Here we go. If buyers of Australian seaborne gas in Asia need to hunt for alternatives, then that's going to make us kind of twitchy about what our freshly newly acquired replacement markets are, for to replace Russian gas, essentially, right? So I think we've been to Jordan. We're getting some from, I think, Jordan. I can't remember the full picture. I'm not going to pretend I do know where we're getting all our gas from. But the thing is, if this has a knock-on effect to Asia, then Asia is just going to look to Europe or to the Middle East and to tap where where the Europeans are getting our gas. All right. So that's really put things on edge. But I think we know where we're going to get our gas from. We're going to get it from the guys who bombed the Nord Stream 2 pipeline, and that is Joey B. Biden and his mates. So, we had 8 tankers of LNG come in from Florida in the last quarter of last year into Europe. And we certainly have the plants to regasify in Spain and a couple of other locations, which are quite underused, actually. So this is going to be a really interesting picture for North American gas if this Australian sort of domino effect then puts constraint on where the Asian markets are getting their gas. They're going to then look to tap the Middle East. The Middle East are probably going to take on that much bigger buyer, bulk big buyer. And then that's going to, push essentially, all us Europeans to get more out of the US. And that is one of the reasons why I'm going to remain bullish on some nat gas companies in the US. So just a really good article here to read from the FT. Okay, speaking about that China cut story a little more. Um, yeah, I was listening to Milkshake Markets and Madness. It's a podcast. It's a kind of a finance, economics sort of podcast. It's interesting. Don't want to use the word economics and do them dirty like that because that would mean it's pretty snory. But yeah, it's a good podcast. Give it a listen. But they were really talking about this situation where we have stagflation. Well, actually, stagflation. Yeah, really in China. So they've come out of COVID, um, and they're trying to now re-stimulate the economy, get commerce back and going, and they're just not able to do that, and they're seeing they're just seeing a bit of a stagnation there in the economy. And we're going to look at really what the banks are looking at for Chinese GDP going forward. Even this morning, tuning into a bit of Bloomberg, they're talking about the crazy, GDP figures and growth engine that China is, and the era really over the last 10, 15, 20 years of that really being this engine economy for the world. Um, it's just not there anymore, and I think it's going to be half a generation for us to maybe get back there. And so anyway, a lot of people I think would have expected China to actually cut these loan rates a lot more than they did. They came in softer than expected here, right? But the thing that they were talking about on Milkshakes Markets of Madness, and shout out to the guys if you're listening, I don't think they will be, but was that if China have a problem, and I hate jumping more than kind of two steps ahead when I'm thinking about trades, because I really just want to know what is the trade. It's like, okay, I get the concept, but what's the trade? But they were saying that if China really has a persistent problem with stagflation here, that they may devalue the yuan. They might print a bunch more yuan, or take some other policy decision to do that. If they do that, you are going to see the dollar up like 5% pretty quickly. And if you see the dollar up 5% pretty quickly, as correlations go in these markets, you're going to see a crash in the euro, a spike in the dollar, crash in the euro, crash in pounds, Bitcoin, no one cares. And oil's going to, be under quite a bit of pressure as well. But and gold, I mean, gold, forget about it. Gold is going to get destroyed. I mean, a lot of people were trading 1923 right now on gold. I mean, look, remember like 3 months ago, 4 months ago, there was people talking about 2,500 per troy ounce of gold, and it's just not happening. I mean, for a brief month or two, gold, I think, was a fantastic trade. I think it's a better trade than it was last year. It's certainly a better trade than it was the year before for us intraday traders. But anyway, enough on this story. But do watch out for that, because that's going to be a really interesting, big level one risk macro event, I think, if China go ahead and make a policy decision to devalue the yuan to stimulate growth in the economy. So that's much bigger story, one to track. Now moving over to energy markets, here on oilprice.com, Tetsvana, Paraskova. All right, I butchered that. Anyway, really, I'm a bit skeptical on these articles every now and then, especially, HFI research is fantastic. But it really, this references John Kemp. If you don't tune into John Kemp or subscribe to his newsletter and you trade oil, you have to subscribe to his newsletter, and it's free. But this really sums up a lot of what John is talking about, and a lot of the risks that are in the picture for oil throughout the rest of this year, and will be pervasive into next year. So I think if you do trade oil, you got to read this article, because there is an absolute laundry list of things at any given time when you're trading oil. There's a laundry list, of things for the buyers, and there's a laundry list of things for the sellers. I think the sellers are smoking crack, and they read the back of Kellogg's cornflakes packets normally. But the bull picture is just growing and growing and growing. Just give this a read, and you'll kind of be in finer fettle than you were before for trading oil. And referencing one of John's articles here in Reuters, he is their senior energy correspondent. He's saying that, yeah, we are going to tighten into the end of 2023, something that I've been saying for 2 years. Well, I've been saying for, this all start of this year and last year that, we're just going to grind higher and higher in oil. But he's kind of outlining, and this is, you've got to read this as well, outlining how it's not going to be a crazy flight to 100 on Brent or WTI 90, but it will be a slow grind into the end of the year, I think, to the highs, and not without a couple of check and pullbacks. But as we come into December, there will be seasonal selling coming in at the very start of December. And then you should be looking for quite a strong bid to take us into the end of December, transitioning into January. Okay. And that will be presenting itself on the November contracts. And now on this current October contract, we flip for volume to trading October right now. So I'll post all of these as per usual in the link on YouTube. One more thing to look at in the global sense, in energy and indeed geopolitical sense, is that the BRIC summit is happening now this week in South Africa. We saw a couple of weeks ago, Russia held a sort of a pan-African sort of get together that was not that well attended, but really we saw in and around that same time the instability occurring in Niger, who are, of course, upset with France and basically a lot of these Western G7 countries, obviously the US as well, with transporting gas that is from their offshore, transporting it through Niger and then up into Spain and then shipping it out from there. And so they've said that they've had enough. There's been a military coup. And so, this is going to be kind of interesting in the midst of that sort of military situation in Niger now. But yeah, as I was saying, or a couple of weeks ago, Russia held this sort of love in, if you like, for a lot of African nations. I suppose for Putin to test the waters to see who's with him and who's against him. But the net result has been that you're seeing a lot of citizens in the protests in Niger running around waving Russian flags. So before we had this sort of proxy war front between Russia and the US in Venezuela, right? So not many people are aware that the Venezuelan airspace is actually protected by Russian MiG jets. And the Venezuelan president actually has a private detail of Russian soldiers as bodyguards. So this is kind of, how the proxy war has gone there. And that tumbles into how Chevron are now switching their investments into Guyana, which is right next door. So that's that, there will be blood milkshake thing. They just gone next door to Guyana and they're going to drill pretty much the same oil reserves, except just from next door, because they're not very comfortable facing up to Russian accents in the bars in Venezuela, right? So, and I think they've been there for about 40 years drilling oil in Venezuela. Anyway, let's move on here. But this, again, not so much of a tradable event to come out of this, but there could be some geopolitical saber rattling coming out of that. Something else to keep an eye on, which would potentially have an impact on price, is that Russia is ramping up its Iraqi oil production. Now, they were in Kurdistan drilling oil, and then that's kind of gone by the wayside now. But they do have assets in Iraq. And net, I think we're looking at a close to 2 million barrels a day of potential supply coming into the market. And the horrible thing about this for oil traders is that it's going to come into the market in a way that you're not really going to be able to track. Now, there was a story as well on oil price this morning about a tanker, an Iranian tanker coming in, a full Iranian tanker coming into port in Texas to offload a shipment of illegal Iranian oil. So there's all sorts of weird stuff going on. Who knows what's going to happen to that oil? But I tell you, it is going to get refined. Um, so just keep an eye on this because I think this and a couple of other stories, if you read that John Kemp article, really pertain to how, yeah, we're quite high in oil for the year. And I might I'll switch over to that chart in a minute. But yeah, we're quite high and well sustained in oil price at the moment. However, technically, for us guys in the room, we're looking at some, 82.68, you know what that level is. We could easily just kind of hold there for a little bit and then just reject if we don't get some time acceptance at that level. And and then we could just reject and kind of, start to sell down a wee bit and really search for buyers, maybe closer to like 75s. So do be careful out there on oil, on the outrights, especially if you're long outright on like a futures market, or any of those future spreads, just be careful. Because as I said, I just don't know if we're going to have that holy mess of a hot bid to 90s, or I think 82.60s is going to be the level that it needs to become a floor before we can kind of dream about $90 on WTI. So I do give this a read. Now, something that not only I have been pretty perplexed by, but bonds just cannot get a bid, and the yields, of course, are just phenomenal. You can get paid 5 spot something percent a month on US 4-week T bills, or I think they're T bills. So, the yields are just going higher and higher on the 10 year as well. I think it's like 4 point something percent on the 10 year. So, no one's really, in our world, no one's really going to be holding 10 years of Tino, right? But we are certainly going to be trading it intraday. And you got to, I mean, I think if we pop again, and we'll look at this in a minute, to 110s on Tino, it's 110.6s. I think that's been a huge support that we've dropped down through. And if we come up there this week, and we may do with Jerome speaking on Friday, I think it's potentially quite a sale there. And we could see even higher on these bond yields in the US. And of course, the German Bund is hanging out in the same clubhouse, and just can't get a bid, and the yields are higher and higher and higher. So here's what is tradable information about this, right? Here is what is tradable, is that essentially, if the yield on the 10 year is like 4 point, I don't know what it is, let's say it's 4.2 or 4.6, whatever. If it's 4.6%, and if it's 5% on the 4-week, right, on the 4-week note, what the hell are you doing risking your ass in the Nasdaq when you can get paid 5% at the risk-free rate? The risk-free rate means whatever the bonds are trading. Well, if you can go out and get the bonds, do it. Get your 5% every 4 weeks. Compound that over 12 months, and all I want is an invite to your yacht party. That's all. So just keep an eye out for that. I think it is putting a lot of this pressure on equities. A lot of people are kind of figuring, hold on a second, if I want to be riding the equity train long, I want to be doing it from a lot lower. We did call the low on the Dow on Friday, much to Jason's annoyance. He said, where are you stopping out? I said, what is I 34 420s? He said, right, I'll start buying there. I'll start buying more there. So we are long Dow since Friday, and it's we're up. I don't know, we're up a nice little bit on that trade at the moment. But is it going to hold? Who knows? But just something to think about on this equities picture, and indeed if we start to drop even further on equities. All right, to move this into a close, an interesting story to me, and I was listening to an economist podcast about what's happening in the space area between now and the end of the year. And there are actually 4, if maybe 5 programs that are set to land vehicles, unmanned vehicles on the moon between now and the end of the year. 5 different missions. So it's been what, like 70 years, 70 years since we were there, and now all of a sudden there's going to be five different vehicles there from India sending their second mission. They unfortunately their last mission crashed as it was upon entry. But they're essentially, a lot of these explorations are trying to see if there is water anywhere around the southern poles. Okay, so it's actually fantastic because essentially all these missions are trying to figure out, can they actually have manned settlements on the moon for, whatever they want to do, host Bitcoin parties or whatever. I don't know. But no, it's good to see. It's going to be a lot of fun. So, you might want to look at that space index as we come into the end of the year, right? And I think there'll be a lot of interest in the space ETF. Okay, one last thing on the sort of macro picture here. I just wanted to look at Nvidia, and these are monthly bars all time. All right. Look at how high this thing is. I think it's trading at something like 242 times price to earnings ratio or something like that. It's absolutely crazy high. And I just got to think, who's buying it up here? I mean, obviously the 420 level. All right, well, that's Elon Musk definitely buying that. But apart from Elon, you just, when you're buying, as market psychology goes, when you're buying this high, and Warren Buffett will tell you this, when you're buying it this high, you're just hoping you can shift it on to the next guy. You're not buying it because you think it's worth $423 a share. You're just buying it because you're YOLO this thing for, a couple of thousand shares, and seeing if you can just bash it onto the next guy who's going to then carry the bag. And so 420s here is sort of that May this year May high. We've come back down through it twice here, so keep an eye out for that. We could start crashing down. Where is support's going to be? 346s. It's still too high there, I think. I mean, I like buying things cheap and selling them expensive. So if this pops back down in the range, I'm going to set up an alert here. And I'd say maybe in 2 years, I'll probably get an alert and I'll just buy 230s and sell 346s. Simples. So that's it. Space. Let's look at that space ETF before we go here. Space stocks to infinity and beyond. Love it. Let's do some candles. Can't do the candles here. Why is that? Okay. So it's not, it's kind of cheap actually. $20 for a piece of this. I like that actually. I like that. Yeah, it's nice. Yeah, I could be interested. All right. So that's it on the kind of macro stuff, and then we just go over to the charts here. Quickly look at oil. What we were looking at on oil last week. Just let me see here. We had some pretty nice levels to look at actually. I have updated the areas on this, so these are not the areas I was looking at last week. Well, actually, I think the top is, but not the bottom areas revised. What we were looking at on, yeah, so on Friday there, the short off of that C valve down, and then the supports of the 79.11s. Um, Fantastic. Sorry, this is rolled forward, so I didn't actually roll this on Friday. So we weren't actually trading. These are not the prices we were trading on Friday, but these are the relative support levels we were trading on Friday. So I was actually short this thing, and I don't think I went on the long on that at all. Um, I am long other areas of oil actually in the futures market. So yeah, look, 81.98, call it 82s. I think there's a little bit of resistance there. Definitely a lot of resistance to be had at 82.60. So keep an eye out. 82.60s will not be a place to initiate a long, I think, at all this week. So do be careful there. What else then? Yeah, I mean, if we can get up over 82.60 is great, but I won't be buying it from there. I've already bought it from way lower than it is right now. On the sort of swing and medium term account. All right, here Nasdaq coming in with supports really. The 14771s came in there Friday as resistance. I can't remember what we were looking at on Friday. Oh yeah, we were looking at imbalance pullback onto VWAP to occur there. Didn't actually get it. Didn't get a pullback here over the open. Actually, oh sorry, we did. Sorry, we did over the open. There it is. Just let me normalize this chart a little bit. And there we go. We did actually get that imbalance pullback on VWAP. So nice little trade to be had, but then we lifted up out of those lows, which was quite interesting. And then if we look over on the SPOOs, I mean, where are we going to this week? I think we could do it. I think we could do 985s. I actually think we could when the week is finished. And I mean, if Jerome comes out and talks in any way dovish, I think these markets are going to be like, "Yep, great, let's do it," and up they go. SPOOs. Let's look on the SPOOs on the daily. Um, yeah, look, we've been talking about a pullback to the 4309s. Unfortunately, the Spoos has actually now gotten itself into a right little tizzle here. If we look at this, this is not good. Oh, what have I done here? Oh, hold on, I've done that. Okay, yeah. So yeah, it's gotten into a right little tizzle here because we dropped out of that support 4411s. Yeah, we put in a nice doji yesterday, or sorry, on Friday. Can we bid out of here? To be honest, for me, I'd like to see 4309s trade before we then look for the longs again in this. And I hate, it pains me to say that because I am swinging long from Friday's lows on the Dow. Can we push up on the Dow while the Spoos does this? I don't think so. I don't think so. So one of either this or the Dow we're going to have a look at now in a second. We'll be doing the tech look ahead for the guys in about five. But this is just broad analysis stuff. Look, if we trade 44.72s on this week, I think there'll be a little bit of selling to come in there. Maybe we need to rebound to the 44.93s resistance, which was the high here in June. Actually, was it the high in June? Sorry, it was the early high in June. And then come down. Who knows? Who knows? But I think we're trying to stay on the bounce right now on the SPOOs. So if we pull back into VWAP, PVH, we may be sustained to push back up to 44.11s. Then I don't think we're going to get 44.11s within before now when we open. All right, then the Dow. Actually, just this week. Well, yeah, I kind of talked about those levels on the SPOOs there, and then the Dow. Yeah, look, I mean, this is fantastic stuff here. Look at that to the tick. Right. So, Jason, if you're watching, buddy, came into the tick where we wanted it and bid, and unfortunately I had to come off the desk just after it trade, or just before, no, just after it traded these levels on Friday. And a few of the guys in the room, I think, are on this one. So well done, lads. And yeah, I mean, look, it's a keeper, I think. Where are the vulnerabilities in this? Look, I think for the week, a test on 34,873s or thereabouts. But look, generally in the broader context of what's happened here, all right, the downtrend on the Dow, all right, and this turned green because we put in all of this time acceptance and value acceptance above that trend, above that trend. Okay, a lot of time here. And so we've come down to test under the trend and then potentially rally from here, which is what I think may happen. So, nice ops to scale out into 34,873s, et cetera, et cetera. I've actually taken a long on this in the long-term account as well. All right. And so I'm stopping out where I said I'll stop out on 34,200s. All right. So, simple as that. Pretty easy trade there. So, what can happen this week? Look, we need to be held around this 34,610s and then go bid for this to be the low that I think it's going to be. All right. And so that's that. Okay, cool. Listen, look out for the dollar. It's quite weak at the moment, but we have that 2020 high on the pullback, 102 spot 99s for support. And gold, you're better off trading oil, boys. All right, listen, that is it for this week. See if we get the camera to come back up. But there's a space ETF. I mean, look, we should all just be buyers on that. All right, guys. Not having any luck in getting my camera back up, but you know what I look like. Please do click to like and subscribe. Have a great session. Have a great week. Stay lucky. Bye bye.